Look around. Stock tickers are screaming. Blockchains are firing. Networks are mapping themselves in real time. This isn't science fiction. This is the financial system evolving at the speed of light. The question you need to ask yourself is this: are you investing in real AI-powered value, or are you just caught up in the AI hype? The line between profit and obsolescence has never been thinner. Stick with me, because understanding this difference will define your portfolio for the next decade. We've all heard about generative AI, the kind that creates images and text. But the real revolution, the seismic shift, is happening with agentic AI. These aren't just tools, they are autonomous systems. They can set their own goals, create multi-step plans, and execute them without human intervention. Think of an AI that doesn't just suggest a trade, but identifies an opportunity, allocates capital, executes the trade across multiple platforms, and then reinvests the profit, all in a fraction of a second. But for these agents to operate in the high-stakes world of finance, they need a foundation of absolute trust and verifiable action. That's where blockchain comes in. It provides the secure, unchangeable ledger and the economic rails these agents need to manage real-world value. It's the digital trust layer for an autonomous economy. And this isn't some distant fantasy. Leading analysts like Gartner are forecasting that spending on AI-driven automation will explode. It's potentially reaching a staggering $2 trillion by 2026. This isn't just a trend. It's the future of capital itself. So how does this new world actually work? It all boils down to something I call tokenized intelligence. We're turning the core components of AI into tradable, ownable digital assets on the blockchain. First, let's talk about tokenized compute. AI is incredibly power-hungry, needing massive amounts of GPU power. Projects are now creating decentralized networks where you can essentially rent out your computer's processing power and get paid in tokens. This creates a global, permissionless supercomputer for AI development, breaking the monopoly of big tech. Next up is tokenized data. AI is only as smart as the data it's trained on. Decentralized data marketplaces are emerging where you can securely provide your data for AI training and get compensated for it. You own your data, and you get paid for its value. Now, let's bring it to the real world with real-world assets, or RWAs. Imagine tokenizing a piece of real estate or a bar of gold. AI agents can then autonomously manage these assets on-chain, analyzing market data to find the best price, auditing ownership records in real time, and even automatically distributing rental income or dividends to token holders. For a concrete example, look at networks building decentralized machine learning models. Developers can contribute to a shared model, and every time that model is used to make a prediction, contributors automatically earn a fee. It's a self-sustaining ecosystem for creating and monetizing intelligence. This brings us to the core utility, the how of this revolution. DeFi Automation 2.0. This is where AI truly transforms decentralized finance. Forget the simple static strategies of the past. We're talking about predictive trading. AI and machine learning models are now being integrated directly into DeFi protocols. They can predict market movements to optimize yield farming, anticipate liquidation events to protect lenders, and perform complex risk scoring on borrowers in real time. This is dynamic, intelligent capital allocation. Then there's compliance but isn't. Huge barrier for institutional money entering DeFi has been regulation. Now, using verifiable AI on the blockchain, we can automate regulatory technology. Imagine a system that can perform KYC and AML checks on-chain, instantly and privately, without a human in the loop. This is the key that unlocks trillions in institutional capital. Finally, we have the ultimate game changer: programmable money, whether it's CBDCs or deposit tokens. When money itself becomes programmable code, AI agents can execute incredibly complex financial logic automatically. Think of an AI agent programmed to manage a corporate treasury automatically executing a multi-part strategy based on preset rules like, if interest rates rise by 50 basis points and inflation exceeds 3%, reallocate 10% of our cash reserves from this money market fund into that short-term bond ETF. It happens instantly, flawlessly, and without human error. By 2026, it's projected that a significant percentage of institutional transactions in DeFi will be managed not by people, but by autonomous AI-powered smart contracts. This is the new era of autonomous finance. So, how do you, the investor, navigate this new landscape? Let's get strategic. There are two key opportunities you need to understand. First, investing in the infrastructure layer. These are the tokens that power the whole ecosystem, the decentralized compute, the data marketplaces, and the blockchain storage networks. Think of them as selling the picks and shovels in this new digital gold rush. Second, you can invest at the application layer. This means looking at AI-managed DeFi vaults, autonomous investment funds, or DAOs that use AI to manage their treasuries. This is where you directly benefit from the intelligence being deployed. But with great opportunity comes significant risk. Let's be clear about the two biggest ones. First is regulatory risk. Governments are still figuring out how to handle decentralized AI. A sudden heavy-handed crackdown on platforms that lack clear oversight could be catastrophic. The second, and perhaps more frightening risk, is model drift or the black box problem. An AI model can perform perfectly for a while and then, due to changing market conditions, start making catastrophic errors. When these systems are managing billions autonomously, a small error can spiral into a massive loss in seconds. This is the death by AI scenario that keeps developers up at night. So you must balance the immense upside potential against these very real dangers. Let us synthesize all of this into a forecast for 2026. Here's the core message. AI is the new leverage for crypto assets. The next bull cycle will not be driven by the same retail hype we saw before. It will be fueled by institutional efficiency and the deployment of a managed capital. We're talking about trillions of dollars seeking a smarter, faster, and more efficient home. The simple act of buying a token and hoping it goes up is being replaced by investing in autonomous systems that generate real, verifiable yield. The fusion of AI and crypto isn't just an interesting niche anymore. It is becoming the central engine of a new financial paradigm. Looking at the current growth trajectory and the influx of institutional interest, an aggressive but realistic forecast could see the combined AI crypto market cap experiencing explosive growth by the end of 2026. We are at the very beginning of this S-curve. The future is here, and it is autonomous. The question of hype versus value is being answered right now on-chain. Capital is becoming intelligent, and portfolios that ignore this shift will be left behind. The decision is yours. Will you be a spectator, or will you be a participant in the age of agentic finance? Do your research, understand the risks, and position yourself accordingly. Right. The clock is ticking. Thanks for watching. Don't forget to like and subscribe for more deep dives into the future of finance.